Hello, everyone. Welcome back to Operation Tradefront. My name is Dustin, and first off, I want to wish you a happy new year. Uh, there's two things I want to go over in this video. One is the actual trade that I made on Friday, and two is what I actually want to accomplish with this trading challenge. It's not just about trading zero DTE trades. It's not just about taking on Wall Street bets type YOLO trades. It's about learning to trade the markets as you see them, and it's a little bit outside of my comfort zone compared to what I normally trade. So it's about trying to become a better trader by learning more. So those are the two things that I want to talk about in this video. First off, I want to start off by covering the trades that I did, or the trade that I did on Friday. So you can see right here, I just queued up my contract here at 23 cents after seeing the big candles in the morning. And I knew, if you go back to my first video, I talked about trying to play it to the put side based on what I had saw. And we'll go back to the charts here in just a little bit. But after seeing the morning rally this way with the doji candle here and then another rally into a second doji, I was thinking, I FOMO'd in, I guess some would say, but I was thinking that we were going to have a doji candle here and then pop off again. So I went ahead and put my trade on. And I'm just going to fast forward through this just a little bit. But I upped it to $25 and wound up getting filled. And as you can see, there was a little bit of a battle went on. And then I drew a trend line. And I should have waited to draw this trend line first. But then when we get right here, you can see this big candle had completely broken through. This was the pre-market trading low and high. And so we had broke through and closed above that area into this red cloud and then had a red candle forming here. So I was thinking, as long as we're still staying above this high of pre-market, we would be all right. So that's what I kept watching as I was trading it. And then we broke down below that trend line there. So I readjusted it to get a little bit more points. So we had another touch here, here, and here now, rather than the one here and the one there from previous. So just trying to get a better defined trend line. So then I drew a support or a resistance line, my bad, here, and we broke above it. So everything was looking pretty good for a flag breakout, and we were doing pretty good there. I'd raised it up to 27 to try to hit the sell if things kept going, to just try to get the profit in. And then I drew another one off of the highs of those wicks. And whoops, over here you can see we wound up closing back above and then had a green candle going here. So I thought everything was going to play out pretty good. And then we had another wick down on a red candle. And then that one closed red. And then we had another red one. So here we were pushing back into here, which I was hoping was going to be a good support, and then we were going to take off from there. Unfortunately, that ended up not happening. We had another big red candle, so I drew another or readjusted my support trend line again down here. Again, no, not any points here. And now in hindsight, I shouldn't have done that when it broke this trend line that I had here. I should have closed the trade out on this push rather than waiting. And that's just something that you learn with experience looking back on trades like this. But you can see the volume is diminishing as well. And that's just something that I didn't notice when I was kind of in the heat of the moment of this trade. So this candle goes back up, or is going back up. And the as the trade continues, I'm wondering if we're going to catch any more strength to ride back up to the resistance area. But I'm also waiting. See, I'm queued up for a trade, or to take a trade if we break down. So this time, when we break down below this candle or this support line with a big red candle, I went ahead and killed the trade, uh, taking a loss of $9. I bought into the contract on 25. I wound up selling it out for 16. Um, so that's how that trade went. And I just wanted to talk about what ended up happening, why, what I saw when I was doing the trade, and what things I could have done better. So down here, get down to the bottom of the screen here. So this is the actual screen that I was watching. You see the support lines and everything are still there. What I should have done in hindsight is I should have waited again longer, because when it hit this second doji candle here, I should have waited for a confirmation break one way or the other. When it pulled back down and came back up, these two lines here should have acted as my resistance. for looking for a short entry, so to say. And then this trend line here, or what should have been drawn this way, a break of that trend line breaking close should have been my put entry. And I actually should have played a put to the downside, and that would have been my trade for the day. But as you can see, we did trade sideways for the bulk of the day here. So the trade of the day would have been this put play down, and then when we bounced back off of this support line here, or resistance line would have been here. Even with this trend line, a bounce back off of that would have been a great put play as well. So there's a couple different things that we can learn from this. One is don't FOMO, and two is wait for confirmation. So I want to get back into the SPY here, looking at the daily here, top screen. So here is what I see. Let me get rid of this, try to make this a little bit bigger. You can see we had 3 wicks to the top up here, which is part of why I thought we were going to have a red day, on the just based on the daily, because when we had the 3 wicks, so I was thinking we were going to have kind of a drop off on a rounded top there. So that's on the one day there. If we drop down to an hour, or actually let me do this, um get a little bit more here. Let's looking at a different trade, different stock there. Okay, pin, here we go. So here you can see um the support line that I had drawn, that I had been talking about in my previous video, that I expected the day to open up below the support on the 31st and sell off down to this area here. So we didn't quite get that sell off. We kind of stayed in a much shorter trade range um, for this day. So it kind of mostly traded sideways, but 476 down to 474, $2 move would have been profitable had you caught this downside movement here, especially off of the peak above. But the other thing, oh, I wanted to talk about this on the daily. On the daily side, when you go back, the ATR for the SPY is $5. So I was expecting a little bit bigger of a move than this. I mean, you can have short move days, but I was expecting a $5 move, which we ranged again 476 down to 474. So $2 out of that. We ranged 479 to 475 the day before, so about $4. So I was hoping that this would be a bigger move, but a couple of things about that I didn't think about was, one, it's Friday. Less volume on that could have been. Two, for support on the put side, there could have been more people trading on the put side, securing profits the last day of the year, trying to cut any open trades that they had for that. And then also there would be less volume with people being on vacation and stuff like that. So there's a few things that I didn't think about when trading this on Friday. I kind of got excited because I knew tomorrow on Monday I'm not going to be able to trade. So I was trying to get this third day trade in, which was a mistake. Don't ever try to force a trade or anything like that. And then the rest of what I wanted to talk about in this video is just my experience trading and what I want to do with this trading strategy, zero DTEs. So as we go um, and we look at the SPY and trading this way, doing these technical research, or this technical research, can be done on any time frame: the 1 minute, the 3 minute, the 5 minute, 30 minute, 4 hour, daily, monthly, weekly. And I do trade looking at all those things. On my normal trades, I look at the monthly, I look at the daily, I look at the 1 hour. And the higher time frames win. If you ever research that, the higher time frame kind of sets the trend of what you're going to be trading in. And then you want to look for something to trade based off of that. But trading this quick time frame here is a lot different. So when you make a trade on a normal basis and you've got a week out, 2 weeks out, a month out, a year out in the case of a leaps, you've got a lot of time to be right. In this situation here, trading on the 1 minute candle, you can have a lot of fake outs for one, but for two, trading zero DTE contracts, it's all or nothing when it comes to the trade. You've got very little time to be right or to be wrong, and that's why you have to cut it when you do. or when you see a sign of weakness. And for me, like I said, I should have cut it when it first broke this initial trend line that I had drawn here. Instead, I readjusted the trend line, and but when it did break down below it, you saw that I did cut it there. And in hindsight, now I could have waited for it to come back up and maybe not lost as much. And then when it rejected from there, if I hadn't have cut it, I would have been at a much bigger loss. So I'm glad that I cut it when I did. I wish that I had kept my trend line here. And when we actually broke down below it on this big candle, I wish I had cut it there instead of taking a further loss. It would have saved me a few more dollars. But as you can see with this, I'm down to $24 in the account, and that's why I'm not doing this with a big account. It's not that's not the intention. I'm not trying to make a ton of money. I'm just trying to learn. And trading with $24, $25, if I lose, like in this case I lost $9, it's a pretty cheap education considering what people pay for college and stuff. So I did learn a lot in this trade. The thing is am I going to remember this when I'm in the trading battle the next time? So that's some of the things that you've really got to practice, is when you learn something like this, and then you see how things have played out on this trade. When you go to make another trade later, you've got to remember this and remember sort of the pain that you suffered. So with this, again, I want to say, please do not trade these as on trying as a Wall Street bet's trying to make a lot of money. Don't try to go about it that way. Use it as a learning experience if you wish to try to learn more, but don't do it with real money. Do it with paper money, or if in my case, like I'm doing here, do it with very little money. I'm not a financial advisor. I'm not saying to do anything or recommending that you do anything with your money, but just do something. If you're going to trade, you've got to do something to learn different strategies and techniques until you find something that really works for you in every aspect of what you're wanting to trade. Now, right now, I trade options primarily. I trade long term contracts, I trade short term contracts, obviously, zero DTE contracts. I sell premium. I do the wheel strategy. I do poor man's covered call. So I have a ton of strategies, but I'm always trying to learn more to try to become a better trader. And learning things like this, watching things like this, applies to a lot of things. Not only could this help in a zero DTE type of scenario, but it could also say I wanted to buy an Apple call 3 months out, but I wanted a really good entry, and I had time to sit and watch the chart. I could find this low entry to be the reason or something like that, if I really wanted to trade this day. Or I could go back and look at the 1 minute chart to see how we traded this day, to see what the chart is telling me about support being down here. You can see all these wicks down here at the end, support here. We got a little bit of support there. We got a resistance up here, just a little bit below those wicks at 476. So you could use all of this to say, okay, in tomorrow's trade, I want to make a call. I'm going to make it if it breaks above. I'm going to you know, hold off on the trade if it breaks below. There's tons of different ways that you can interpret the information that the charts give you, and listen to the story that the stock is telling you. So as I continue this trading challenge, please, if there's any questions that you have, comments or anything like that, leave them below. Please leave a like on the video, subscribe to the channel if you haven't already, and let me know what other types of trading or challenges you would like me to do as I progress through this, and we'll add those to see what we can do moving forward. So without further ado, I should say. Um, Please like, subscribe, like I said, drop a comment in the comment section below, and also in the bottom there is a link to TradingView, which is what I'm using up here on the top up here to track. This is TradingView. The bottom screen is Moomoo, and then I also use Robinhood to get a good visualization on premiums and stuff like that, because it's a little bit easier to look at than trying to pull everything up on Moomoo here. So without further ado, I hope you have a blessed day.